righty. And we're just I'm grinding through some news because we had some earnings. I learned a couple of things today. I learned that Valvoline trades on the New York Stock Exchange. I had no idea. I mean, I had no idea it was a public company. I haven't, again, it's one of those things where, like, unless you're, like, watching everything every day, like, I mean, who trades Valvoline? But, they came out with, apparently they had earnings. And, kind of showing the power here of TradingView, which, I've taken for granted. And I know I've been a pretty bad connoisseur of it. I know I've beat it up, but I mean, it does have a lot of power. I mean, but so here's Valvoline. And then what was cool is I was able to just go in and click on the symbol. And it gave me all this kind of information. I was able to get the financials. There's news, documents, ideas. I don't really care about ideas and minds. This is usually other clowns out here, painting their charts. Like if you go to ideas, you'll have some people painting their charts like this. See, oh, it's a double bottom, right? I mean, look at this. I mean, who the hell's got the time to do all this? And if you have all this shit on your freaking chart, like, what are you doing, dude? Like, what are you doing? Like, look at this. Like, you got all this on your chart. What are you doing? Are you fucking buying it or are you selling it? I mean, that's one thing I can't stand about, and I look at some of these charts, like, what the fuck are these people doing? What are they doing? What are you doing? What the fuck are you doing? I mean, it is hilarious. That's why usually when I go through here, I'm usually disgusted in about 30 seconds because I'm like, oh yeah, this is it. Just what is your trade? Are you fucking buying it? You buying it? Just buy it. Right? It should be one simple chart. Here's the chart. I bought it, or I sold it, or I bought this option, or I sold this option. No, it's after the break. Oh my God, right? Like, whatever, man. Chart painters. I can't stand them. I can't stand them. I mean, they're just all full of shit. So anyway, just you go through all this stuff. I was like, wow. But then I thought what was really cool, and I didn't even know you had this ability, is you can go to ETFs, and this is all the ETFs that are actually holding this stock. Now, not that I don't care really about Valvoline. I thought that was really interesting that you could go and see and actually have it list from what I believe is the highest position to the lowest, maybe. I don't know. I didn't really, dig in that far. But these are all the ETFs that actually hold Valvoline. I wouldn't recommend it. It looks it looks like kind of a piece of garbage. Like it hasn't gone any place at all. Nothing exciting about oil, right? Selling motor oil, but I just thought that was really cool that just from the news flow, you can actually kind of drill in. And I never did this. I never really did this on here. And so, yeah. So I thought that was pretty cool. And then looking down Target, down here, where is Target? Target cut its fiscal year earnings guidance, blah, blah, blah. The company's third quarter adjustment earnings, blah, 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 blah. I don't really care. We are relentless in our pursuit of returning to growth. Blah, of course, because you have to say that because you're just getting absolutely punished. I haven't seen a retailer get punished since like the likes of like Circuit City. And we all know where they are. Even Sears, they're kind of on that path. It's kind of scary to even think that Target is on that path to being like the next Sears. And they have actually just punished this. But the beauty of this, and it actually coming in at 86, 87, or 67, is that the trade we talked about a couple of days ago and even yesterday on Target doing the Iron Condor or the Strangle going to work out great today because it hasn't gone anywhere. It's only down a little bit. And you're likely going to get a volatility. Excuse me, I got a really bad gack in my throat. But we're going to likely get some volatility crush today. And that one will likely work out. But you look at this thing over the years, 5 days, 1 month. This thing just hasn't had a break. Year to date, 1 year down 42%, 5 years down 47%. And then, here's one that in its glory days was, quite the chama. It was a good stock. And now it's kind of on the bubble where, like, if they don't turn shit around, it ain't going to be good for them. So it does seem like they are steering or trying to steer the ship around. I kind of like it here. I'm going to go and look at a couple of things too on Target, even like an after earnings type of thing. I think I may get long a little bit here on Target. And yeah. So there was that, and then I also seen Lowe's came out having kind of the same backlash as the Deeps. The Deeps kind of got hammered yesterday. And talking about the Deeps, their earnings across the board were, and everything was just bad. I mean, it was pretty bad, and that doesn't really paint a very good picture for the economy kind of going forward. They blamed it on the lack of storms, which I thought was kind of weird, which I guess could be true, but I don't really think so. I think it's more that, you just, that whole market, home improvement and contracting has slowed down significantly, and it has to do with just households. Look, households have actually moved, and I know even myself, I've kind of laid off. I'm a pretty advocate. I'm pretty strong advocate of like doing stuff, and usually I'm always doing some project that's running me a couple of $1,000, every 6 months. I mean, honestly, religiously, I've always been that way since I've lived at my house. And I can honestly say in the last 6 months, I've actually turned it off. I've kind of stopped. Just because, kind of moving into more survival mode. Like, and it's like, with the cost of everything else going up, utilities, taxes, whatever, you name it, groceries, you kind of channeling the funds elsewhere. And so I think that's kind of showing its head here on a stock like the Deeps. And then again, Lowe's, same thing. Having the same, even though their earnings, it is popping, it showed that's popping up here today. Their earnings were actually up. So I don't know, is there like a shift now going on? That people are moving to Lowe's? I don't think so. They're saying it was growth in their, what did they say? Where was it? They said it was growth in their pro business. I'm a pro at both of these. I'll be honest, 90% of the time, if I need building grade materials, I'm going to the Deeps. And if I need more like finish / presentation type products, I go to Lowe's, because Lowe's usually doesn't have like the builder's grade materials that Home Depot does, as far as like construction stuff. As far as like finishings and stuff like that, I definitely go to Lowe's, because some of their moldings and their housewares and their fixtures, seem to be a little bit better. I mean, they look nicer. They don't look as builder's grade. So for those type of things, I can see why, but I don't know if this is a complete shift or not. Some people are going to say it's because Home Depot supports Trump. It's like, oh God, shut up. You know what? Stop. Stop. There's not enough people on either side to change the trajectory of these businesses, folks. I hate to tell you, although it may appear to be something on the surface short term, but at the end of the day, look, I still go to Lowe's. I supported Trump, and I still go to the Lowe's, and I still go to Target, and I still go to these businesses. I don't believe in all this like cancel bullshit. To me, it's like, what, if I on something, I want to go to a store, I don't really give a shit. I don't care who they vote for. I want to go and get my stuff and come home. That's it. And I don't give a shit because I'm not like holding Trump's flag out on my chest every time I walk out the door. So anyway, so there's that. So I probably just lost a whole bunch of people like, oh my God, get over it. Who cares? They're all scum. They're all scum. Every politician, anybody in the public eye, any politician, they're all scum. It's just who's less scummy than another. It's really all it is. And it's just a popularity contest. So anyway, there you go. That's Lowe's in the news. And it is gapping up a little bit today. I did not do any earnings trades in Lowe's because it's never been, if we do actually look at, and Target, we are going to do something today. We'll likely get some good volatility in there. And I'm even up today in my account, which is quite miraculous. But we're going to get a volatility crush today in Target. And then Lowe's, it's gapping up. There wasn't much volatility in this one anyway at 33. So, I'm actually glad I didn't do anything because you really wouldn't have. And more than likely, if I did do something in here, with the way this is gapping up, probably would have got run over. Because only at 13, I would have probably been out in December, and only a $13 move, and it blew it. And likely I would be, kind of getting pressed right now on my 240s, because I probably would have done something like this. Is what I would have done. I probably would have done something like a 240, 200. And I'd be getting pressed on my 240s right now. And without a lot of volatility collapse at 33, it's not really going to me, unless it goes to 10 today. I don't think there was never there. Target, anyway, let's just keep looking at the news here and see what's kind of coming on. Dycom, I saw this one. And I don't trade this much at all. In fact, at all. I don't even think I've ever traded it. It's gapped up pretty nicely this morning on earnings. You could see it's had, it's kind of been a banger here. And I was going to go and look and see. I don't believe it's really ever going to be on it's never really going to be on a list that I'm going to trade. And just looking at this and even looking at the options here, there's really not a lot of there. No open interest anywhere on either side. Spreads that you could drive a truck through. And so this is never going to show up on a list for me. Unfortunately, and I'm not going to go and buy it here, but if I were looking at it, I was kind of saying to myself, I kind of missed the boat on this one. This one does look like a good stock to own here, especially in this type of environment in what they do. They provide, services for basically like networking and shit, like stuff, so I was like, wow, that kind of missed the boat on that one because it looks like a really solid one. And that's why it's important. Like, and I just look, I've kind of been out of the game a little bit. And, this is kind of one of the downsides to this is that I would have probably been paying attention to that a stock like that if I was kind of still had my head in the game. But since being out of the game a little bit and then coming back, it's like, kind of miss that stuff. So anyway, there's Dycom. Let's see, TJ Maxx. I didn't know they had earnings too, right? That's good. So it's actually a good sign, I think, that a number of these retailers that have come out with earnings, Lowe's, Target, now TJ Maxx, and they're all kind of stable. Even though Lowe's is gapped up, they're all, for the most part, stable and reporting somewhat decent earnings, which is, in my opinion, and is good. Now, I mean, I'm not really looking into how they're doing it, honestly. I would likely believe that a lot of them are doing it by cutting costs, shutting stores. I know they all are kind of shutting stores down here and there. It's kind of stealth mode. It's not like a mass thing, but I know they're all shutting stores here and there, the ones that aren't profitable. And I think that's helping them a lot. I think a problem with a lot of these retailers in general is they've just expanded too fast and they started building stores. And I think you're starting to see that with Chipotle. Like if you look at Chipotle and you look at their stock, I think they've just pretty much, they put one store out of business by opening another store that much further down the street, which I don't get. The whole allure of Chipotle was the fact that they weren't littered all over the place. Like at one time, the only Chipotle that I knew of in New Jersey was up near Bridgewater. And the only reason why I knew it was there is I was taking some classes there many years ago. And it was packed. I remember waiting in line for 45 minutes to get a freaking burrito or bowl or whatever the hell I got. I don't even remember. It was the first time there, and I was like, damn, man, this place, and then they put them all over the place. And now, like, again, one store puts another store out of business, and then they wonder why their sales are down. Not smart. So anyway, that's kind of what's going on there in the markets. We are getting a little bit of life here in the market here. At least we're kind of green right now. I kind of didn't want us to be green. I know I was watching last night and I was like, you know what? I don't like when we gap up pre-market because it seems like it's a signal to kind of everybody sell into the open. And that seems to be what's been going on. Where when it was the other way and the market was going up, if you noticed that we were gapping down overnight and then they would be buying in the morning. I mean, it seems to be the opposite. So anyway, we'll see if things kind of hold today. One story that's I think is interesting is gold is up like $50. I thought that was very interesting. That may kind of turn the corner again, perhaps. And I think out of all the indexes and the one to watch, I think it's going to be the Russell going forward. Because it was the only one, I think, yesterday, for most of the day anyway, that printed a positive day while the others lagged. And I think what the allure of the Russell is for traders right now is as kind of they unwind this whole AI tech trade. And look, they're not just bailing out of it completely. They're trimming. And which, look, I get it. Especially if you're managing a ton of money, you're going to trim. You got huge profits sitting in there, and they can't just, a lot of these places, a lot of these hedge funds and whatnot, just can't go and sell shit overnight, right? They're not like you and I where they could just throw their shares out and then they get it. They're selling thousands and thousands of shares. they have to put them out there, and then they have to actually disclose it too. And so it might take them 3 or 4 days to unwind that. And so, with that being, and then, if you think the money is just going and sitting in cash, you're out of your mind. It's rotating, and it's not just rotating. And I think it's rotating down out of the bigger mega caps into the more, and I don't think it's the small caps. I think it's more the mid caps. And I think if you were to look at the Russell in general, it's more of the Russell stocks that are at the higher end of the food chain that are kind of capturing the volume. And a big proponent of the Russell in general, too, is a lot of these mid-cap biotech stocks, which seem to be capturing a lot of attention. And that brings me to the XLB or XBI, which has done great. And I still think there's plenty of room to run on it. I think there's plenty of room to run on it, to be honest. And because if you look at this one, we have to go to the daily. It's kind of in the middle of where it was. And so I strongly believe that if you, let's get rid of that. I strongly believe if you kind of leverage into this one on pullbacks, we're at 115. I think easily this thing hits 135 to 140. No problem. Now, is it going to go back to 170? Look, I wouldn't expect it to go all the way back to these highs here from back in the pandemic. I think this is an anomaly up here. This is my opinion. And this is the anomaly of the pandemic right there. But I think if you kind of take that out of it, even come down a little further. If you kind of take that out of it, this thing kind of peaks off at about 140. And I think, at 115 to 140, I think you still got some room in a sector that's relatively, hot right now and more apt to benefit from an AI type of world than most of the other industries. And I think that aspect is what's kind of capturing people's attention on this sector. So, and then looking at the XBI, and we've looked at this one a number of times, you're not selling volatility in here at 30. You're just basically buying calls. And I don't think that's a bad play. But I think if you are going to buy calls in this, go out to the Decembers. Do June, do December. Give yourself plenty of time. Go in the money. This has got decent liquidity. The spreads are not that great. I'll grant you that. But you should see these tighten up. And you do see that there is, I'm out in June here, folks, and you're seeing a ton of open interest out at these big strikes, the 110s, the 115s. All the reason these in here don't have that many contracts open yet is because they're probably relatively new. They probably just added these. And that is also a good sign, which means that there's interest in the options in this. And again, if you stick to the bigger strikes, so if you did do and you can see here, this spread on this is really not that bad. This is not that bad. This is pretty tight. And so if you did like a 115, 120, you're still able to do that for 205. And so to me, that's still a good place to be, is the XBI. The other thing, too, is that, I've not been one to... let's see if we go in here. Where do I? Let me see. Oh, a news flow. I didn't have the news flow. The one thing you can do in here is I've not been. Where am I doing here? Oh, there we go. I'll be right. The one thing I've not been good at, or at least did with this sector, is buy like individual underlyings in here. Just hasn't been my thing. So, just be aware of that. I really, and let's see what's in, I would assume, I'm starting to stutter here. I would assume what's in here is like the Amgens and that type of stuff. And what I'm trying to figure out here is how to get that on. There's got to be a way to get that on that screen, and I do not know how to do it. I don't know how to do that. I do not know how to do that. Let's see. Blah, blah, blah. It's got to be here somewhere. Here, more about the fund. Ah, there we go. There we go. Holdings. Yeah, I would believe it's like Amgen. Yeah, Amgen, BridgeBio, Regeneron. I kind of expected all these. Now, you could go and, trade all these. But to me, rather than hold these underlyings, and most of these trade kind of in parallel anyway. So, to have the specific, and, you're getting, you look at these percentages, it doesn't really make sense to me. It's like just buy the damn fund. Right? So that's kind of where I'm at with that. Right. So there you go. On the XBI. Now I already have a bunch of this, so that's why I'm not getting any more. And then the big kahuna. And I'm not going to do anything with this, honestly. I think I'm just going to sit on the sideline. I have a bunch of NVIDIA. I own stock. I got options. You can see I'm actually okay in them. I don't think I'm actually down. Yeah, I'm still up in them. I have the 200s, but I'm out in September and I'm out in June. My hope is with NVIDIA is that it comes in and it kind of does nothing, is what I would like to see after earnings. I would like to see really nothing. Have it be up like maybe $5, have the earnings come in around or maybe even a little better. Even if they're better, I just hope that the stock, in my opinion, just kind of does nothing. I don't want it to get smashed. I don't want it to go berserk. I think if it goes berserk, I think to me that's like, it'd be great for me. But I think if it does go berserk, I think it may be even a signal for folks to maybe even get a little more short. And I think you'll kind of get that it'll go berserk and then it'll tank soon after, like SanDisk. And I wouldn't want that to happen with NVIDIA, because I would like to see it. I would like to see it kind of. I would like to see it do good. Anyway, that's just my opinion, and that's kind of what I would hope it does. Yeah. Did I have that in big tech? I'm looking at SanDisk, because SanDisk got kind of rocked yesterday. Yeah, it got rocked yesterday. But I mean, look at this stock, even on a 4-hour. This is just a rocket ship, man. Just an absolute rocket ship. But it did get kind of rocked. But this is one of those stocks where I just don't know how you even step. Anybody out there, it's kind of the same thing with with Micron. Anybody who says that, yeah, I was short. You know what? You were getting your face ripped off all the way up. If you were short up here and you just decided like, oh yeah, this is the top. Yeah, I don't think so. I don't think so. You know what I mean? Because I'm even listening to like big traders, and they were even saying the same thing with all these stocks, the Microns, these chippers, right? Basically, that were just kind of killing it. They weren't standing in front of that. And when it did finally fall from grace, which kind of it did, I find it amazing. I see all the people, yeah, I was short. You're full of shit. Shut up. Yeah, you were short. All right. And you're telling everybody about it now. And maybe you were. But you know what? You're not going to tell them about all the other times that you were short, when you were short here, and you were short here, and you were short here, you were short here, right? And as you got your face ripped off all the way up, and then when you're finally at that point where it actually did go the other way and you were short, and it's like, oh yeah, now you were right. Yeah, okay, I get it. And then let's go put it on blast on social media. Like, shut the fuck, get out of here, man. Social media really has ruined. It wasn't as bad. It's funny. It wasn't. The whole trading business was pretty sleazy in general with people selling shit. But until social media, it's just the forum changed, right? It went from, people advertising through email to now people advertising through Instagram and TikTok and YouTube. And it's just a cesspool out there. And nobody discloses like they're trading fake money. And it's all kind of a charade. And it just makes me laugh. It's like, what's the big deal? Just tell people. But, I guess if they tell people that it's fake, it has no luster, I guess. I guess. So anyway, there you have it. SanDisk finally coming down to earth. I still don't. No, either one of these, Micron, SanDisk, I can't bring myself to even get long those on this pullback. I just can't. Good IV rank in here, but what am I going to do? Like, I just can't bring myself to get long because there's going to be a reckoning in these. And has it started already? It may well be that the reckoning has kind of started. But the fear is with this is that if it doesn't, right, and it continues, like, let's say something happens with NVIDIA, and if NVIDIA comes out with good earnings, maybe this does gap back up and blow off the top here. I don't know. And I'm not going to play the game like, yeah, it's going to go short. It's going to, it's going to blow. I don't know. And I would not want to be short calls in this. And I really don't want to buy calls at a 78 IV, because the minute this IV collapses, if I own calls, I'm going to get crushed. And a lot of people don't even understand that. I try to explain that to people, and it's like, and then, it's like almost like they have to go and do it themselves. Right? It's like you almost have to go and buy the calls yourself and then see what happens, right? Go for it. And then see what happens. And then when you do get a day where it's up, 30 points, but the volatility collapses by 30 or 40 points, and then you sit there and you say, well, gee, I got these options and I bought these calls. Why are they only up $5? Why am I only up $5? Why am I up $10? Why am I not up, a couple $100? It's because you overpaid and the balloon got popped. And man, I don't know how else to explain it. And it's almost one of those things where it's, I guess you have to experience it in order to realize it, because otherwise you don't. And when I see people out there going, yeah, we bought the calls, and it's like, yeah, all right, yeah, I saw you bought the calls, and then I looked at the market and I saw the calls, and the calls were up big, and you said you did this spread, but you know what? And you said, oh yeah, it was up 30 or 40%. But you know what? That spread that you bought didn't go up 30%. It only went up like 5%. And so you're lying to people. So anyway, needless to say, I don't know if I'm really even willing to kind of step in on any of these right now. I think you kind of sit on your hands, see what happens with NVIDIA. It does look like we're having a pretty good pre-market here. I mean, everything across the board is up. You know, SanDisk getting a pretty good bounce, up 2% pre-market. Micron's up 1%. Google seems to be the kind of prize here at the moment. And the reason is like you got all these, got Buffett now, but then look at what Buffett did from a, I guess, just percentage of assets. Big deal. It's like less than 2% of his assets that he put into Google. And everyone's making a big deal about, Warren Buffett bought Google. It's like 2% of his assets. Who cares? It's like chump. It's like change in the ashtray to him. It's like, so what? If he put 30% of his assets, then I'd say, all right, now you're talking. He's putting his money. It's like, calm down, dude. Calm down. Put it in perspective. Big deal. And then the other side of it is like, I thought he didn't buy, I thought he wasn't into tech stocks. And everybody says, oh, well, he bought Apple. Apple's not really a tech stock. Apple's a hardware company. Apple's a hardware company that makes phones and iPads and stuff. That's what they do. They make stuff. They also do a lot of software. But majority, they're a hardware company. And they're not really, I wouldn't call them a tech company at this. They're a hardware. They're like a manufacturer. So, and Apple pays dividends, right? Apple's not like one of these, Google's like, what does Google have besides intellectual property? And of late, the only thing they really have with any kind of like physical presence of Google is they've been building out their cloud infrastructure. But outside of that, what does Google physically own besides like intellectual type property and advertising space and and all those other things that are kind of like this intangible assets? I don't know. Like, I'm not dissing Google. I own it. I'm long. I'm just trying to like put it in perspective. Like, I don't know. I think this whole Google like move here is maybe a little inflated too, that maybe Google needs a come to Jesus moment to maybe get clipped here. But it's definitely going to have issues when it gets up near 300, just from that point where like, look, it's 300 and that sort of thing. So anyway, that's all I got. I know I rambled a lot. There's not really much going on. Honestly, for me, I'm kind of sitting on the sidelines. I was looking at the likes of like a Lululemon, kind of staying off that one because they have earnings coming out in December. I looked at Adobe, another one that has earnings coming out in December, so I'm kind of waiting on that. Good IV rank on this one. So like I just kind of would play it for earnings. I'm not really an Adobe fan where I'm like going to be a fanboy and like buy it. But these are some stuff that I am looking at. They're in the wheelhouse. Volatility's good in there. The other one I like long is Hut 8 here. I mentioned this one a couple of times. I am long this. I'm in a spread. I'm short some puts. But I do like Hut 8 here, short term. You can see I'm out in March. I don't know which ones I actually have. I have to look. But, I am still looking at some of this stuff. But, to the other side, I'm kind of trying to keep myself in check a little bit and not kind of overdo it, getting into all these positions all over the place either before their time. So, all right, and that's it.